Hey folks, David Frost, LazyGapTrader.com. In this video, we're going to be talking about day trading. More specifically, we're talking about gap trading. I do a couple of things. I teach a course at LazyGapTrader.com. The course teaches two gap trading strategies, the morning gaps and gap fill trades. Right now, let's take a look at a morning gap trade in EDU, New Oriental Education and Tech Group. In order to identify a specific level where a stock is likely to have a price reaction in the other direction, we have to have a methodology. In the course, I teach the methodology on how we can come up with the most likely area where a stock is likely to have a price reaction in the other direction. You see a horizontal line running across the screen, $45.27. Let's pause for a second and look at an email that went out to subscribers first thing this morning at 9 a.m. Eastern Standard Time. So here's the email. Let me just scroll up a little bit. So there were four possible gap trades this morning: ETP, SXL, BAK, and EDU. The only one that hit its level thus far today was EDU, and I say gap higher. Resistance levels are $45.27 and $47.18. Stop and profit target is about 30 to 45 cents. Now, by the way, this is the email that goes out to subscribers who get my daily gap trades each and every day. It's separate and apart from the course, but you get a 14-day free trial with this service. In addition to the morning gap trades, what I've just started to do is I've started to identify the gap fill trades, which is the second part of the course. What I've done is I've listed the top 21 potential gap fill trades each and every morning that you'll get. And what you see here is the stock, the current price as of the close on the day before, the gap fill level where it can be played for a price reaction in the other direction, whether it's a long or short play, and the percentage right now, or as of this morning, of where it is relative to that gap fill area. So that's the service that I provide to subscribers that get my gap trades each and every day. Now we're back on EDU, and what you'll notice with EDU is I've went all the way down to a tick chart because I have to show you that the trade worked out. It worked out so fast that it happened within the first minute of the day. And what happened was, you can see here the stock closed the prior trading day. The closing price was $42.21. The opening price today was $44.19, and it continued higher. The sell short price was $45.27. It made a high of $45.66, which is 39 cents over the level within the stop loss limitation. And just seconds later, the stock was down at a low of $44.88, representing a possible gain of, ironically enough, the same 39 cents. So that trade was complete. It worked out well within the stop loss limitation and the profit target, and we're on to the next trade. This is what I teach in my course. I teach you how to identify the highest probability area where a stock is likely to have a price reaction in the other direction. Now we're back on a 10-minute chart of the same stock, and you'll notice that the stock is trading significantly lower now into the trading day, as the 45.27 would indicate. So the stock found resistance at that level, but it took a while to play out. And sometimes that happens with these stocks. Sometimes we get a quick pullback like we did here. Sometimes they take a while to play out. This one is actually both. We got the quick pullback, and that level proved to be wonderful resistance, and you can see where the stock is trading now. This is what I teach in my course, how to do this. If you want to learn how to identify the highest probability area where a stock is likely to have a price reaction in the other direction, then come over to LazyGapTrader.com, check it out. I'm David Frost. Thanks for tuning in. We'll see you on the next trade.